to Ester Industries Q2 and H1 FY2019 earnings call. We have with us today Mr. Arvind Singhania, the Chairman, and Mr. Pradeep Kumar Rustagi, Chief Financial Officer. We will begin this conference call with opening remarks from the management, following which we will have an interactive Q&A session. Before we begin, I would like to point out that certain statements made in today's discussions may be forward-looking in nature, and a note to this effect has been sent to you in the invite earlier. We trust you've had a chance to go through the financial performance presentations shared. I would now like to hand over to Mr. Singhania to make his opening remarks. Over to you, sir.
Thank you, Kevin. Good afternoon, everyone, and welcome to Ester Industries Q2 FY19 earnings call. At the outset, let me wish everybody a happy Diwali. Let me begin this discussion by highlighting the key operational developments during the quarter and first half, post which Pradeep will run you through our financial performance. So to begin with, we have seen a steady pickup in the business, largely driven by the strong performance of the film business. As discussed in our earlier calls, the sector dynamics following attainment of demand-supply parity has changed for the better. A pleasing development, especially if one takes into account the rough phase most of us went through in the not-too-distant past, wherein the prices wilted following the expansion spree undertaken by most of the players in anticipation of the strong demand. Demand-supply enabled pricing movement to remain steady, in turn helping the business to deliver consistent performance. With limited supply in the pipeline, Jindal being the only exception which is expected to start commissioning by late Q4, early Q1 FY20 next year, we are hopeful of pricing remaining stable in the near term at least. Moving on to the demand side, we expect the momentum to continue, which would further support the realization. The optimism stems from our discussion with packaging players, our primary customers, who in turn are anticipating steady demand for their business. In addition, we are also working towards improving our product mix by increasing the share of value-added products, in turn boosting the profitability and contribution. Specialty polymers business remains soft. Volume offtake remains muted, continuing to trail the anticipated levels. The business is still in early phase characterized by elevated levels of uncertainties, especially surrounding the volumes. We believe this is a temporary phenomenon and expect the business to gain steady momentum in the medium to long term. The business demands a lot of patience both in terms of time and money, but we remain confident in its potential and are undertaking the requisite measures towards accelerating its pace. Our product pipeline as well continues to remain strong. Moving on to engineering plastics business, the same continues to perform well, contributing to the overall top line of the business. Margins though remain under pressure owing to higher input prices. We are trying on increasing the share of the value-added products in the mix to overcome the raw material challenges and bolstering the contribution from the business. Lastly, we are also implementing several measures towards reducing our operating costs. These include multitasking, multi-skilling, streamlining and automation of our business processes, which besides making our operations far more efficient, will also result in considerable savings. Aside from this, we believe there is an opportunity to pare our interest costs and reduce debt to the monetization of our corporate office building. Our clear focus is on driving profitable growth in our core business and eliminating avoidable non-core expenses. To conclude, I would just like to reiterate that we are on track towards delivering steady performance thanks largely to the solid performance of the film business. Specialty polymers and engineering plastics business should support the overall growth. With that, I hand over the floor to Pradeep, who will run you through our financial performance. Thank you.
Good afternoon, everyone, and thank you for taking the time out for our call. I trust that all of you have received the investor documents circulated by us earlier. Let me quickly summarize the key financial highlights for the quarter, following which we can begin the Q&A session. Starting with the top line, our revenues net of excise duty and GST for the quarter stood at rupees 276 crore, as against 197 crore, higher by 40%. While on a half-yearly basis, the same stood at rupees 503 crores, as against 385 crores reported during H1 FY18, higher by 31%. The growth to a large degree was owing to the strong performance of film business. EBITDA for the quarter stood at rupees 27 crore, as against rupees 15 crore generated during Q2 FY18, higher by 80%. While on a half-yearly basis, the same stood at rupees 54 crore as against rupees 31 crore generated during the corresponding period last year, higher by 74%. The expansion is to a large degree owing to by Mr. Singhania earlier and our effort towards improving the product mix. Finance cost for the quarter remained steady at rupees 9 crore, while on a half-yearly basis, the same amounted to rupees 18 crores. Our total interest-bearing debt as of September 18 stood at rupees 290 crores, resulting in debt-EBITDA multiple of 2.67. We are working on ways towards lowering the debt and are targeting lower levels by 2020. Depreciation for the quarter and half year stood at rupees 8 crores and rupees 16 crores respectively. Profit after tax for the quarter stood at rupees 7 crores as against loss of rupees 66 lakhs reported during Q2 FY18. While on a half-yearly basis, the PAT stood at rupees 15 crores as against loss of rupees 79 lakhs reported during H1 FY18. Moving on to the segment-wise performance, film business continues to perform well, aided by improved sector fundamentals. Further, our efforts towards improving the product mix by introducing newer value-added products as well is contributing to the performance of especially polymers business, as Mr. Singhania mentioned earlier, remains soft. While the near-term performance is expected to remain challenging for the business, we continue to believe in its true potential in the long term. Engineering plastic business performance remains steady. While it contributed positively to the overall top line of the business, higher input costs resulted in margin and profitability compression during the quarter. We are, however, working towards improving with mix by increasing the share of value-added products, which should result in positive contribution and overall profitability of business. To conclude, I would just like to state that strong performance of the film business, supported ably by special polymers and engineering plastic business, should help us deliver better performance in near term. That concludes my opening remarks. We would be happy to answer your questions now.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We would take the first question from the line of Amay Mahorkar from MK Global. Please go ahead.
Good afternoon, sir. What is the profitability of the specialty films business and capacity utilization of the same?
We will give you the numbers for Q2 if you want.
Yeah.
Just a minute.
Yeah.
So especially polymer in the Q2, we have on the top sales revenue of 12.43 crores with EBIT of 3 crores. The capacity relation is significantly lower than the installed capacity. We have produced about 10 to 15% is the capacity utilization rate as of now.
Achha.
You see, in this business, capacity utilization is not the key issue. The capacity was not put up specifically for specialty polymer business. If you remember from my previous conversations, it was an old batch plant which was producing film grade polymer, which became redundant, and we decided to convert it and start using it for specialty polymers. That was the whole concept behind it. So really, one cannot go on the basis of capacity utilization as far as the specialty polymer business is concerned.
Okay. And the specialty polymer business includes which part of the segment revenue, sir?
It is chips and film. It is reported in the chips and film segment.
Chips and film segment, no?
Yeah.
Okay. Thank you, sir. That's it from my side.
Thank you. Next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, sir. Good noon, friends. Sir, firstly, sir, congratulations on a very steady set of numbers, sir, quarter on quarter. And sir, just a brief understanding, sir, looking into the second half, how confident are we to even maintain these numbers, or are we looking to better them?
We are very confident that we should be able to have good numbers coming out for the whole year, for the financial year FY19. Yeah.
This trend is sustainable. That is what my question is.
Well, you might have some dips because, the volatility in raw material has been quite high in the last month or so. Raw material prices shot up through September and October. And in November, and through late October and early November, the raw material prices have crashed again. So, if you take away this upheaval of volatility of raw material, the margins are expected to remain steady.
Right, sir. Could you elaborate more on the raw material basket, sir? How the prices, what are the key raw materials and how the price trends have been, the up and down part?
Yeah, we'll give it to you.
Key raw materials are PTA, pure terephthalic acid, and monoethylene glycol MEG. So, in the first week of, let's say, last week of September or first week of October, the PTA was in the range of about 83, 84, which has now reduced to about 77 rupees a kg.
Right.
Whereas the MEG, which was about 74 rupees a kg, has reduced to 67 rupees a kg.
Overall, what has happened is that the prices of raw materials shot up by more than 10 rupees a kg in a month, and the same has reversed in less than a month. In less than a month between in the second half of October and early November.
So, beginning of last week of August, the PTA was about 77, which is the rate prevailing as of now.
Okay. So, sir, the average for the September quarter for PTA was how much for our average cost?
I'll just calculate. Give me a minute.
Okay, for both, sir, both the raw materials. And then we can understand.
In terms of raw materials per kilogram of PET, our prices went up to as high as 97 rupees, 97, 98 rupees a kg. And now this has come back to the region of about 87 rupees.
87 or 77, sir?
87. Per kg of chips. Per kg of chips.
Or let's say per kg of film.
Sir, I'm not getting, sir. Earlier you told that PTA was 84, got reduced to 77, if I'm not wrong.
No, that was PTA and MEG. I have now, actually, to make it easier for you,
right, sir.
I have combined the PTA MEG in the stoichiometric formula.
Right, sir.
And I'm telling you the price of raw material per kg of film.
Okay.
In less than a month's time, there has been a volatility of 20 rupees a kg.
Right.
It went up by 10 to 12 rupees a kg and it has dropped back by 10 to 12 rupees a kg within a period of 2 months.
Right, sir. So you were telling the price of for the mix was 97, and from 97 it has declined to?
Now it has come back to about 86. 10 rupees drop.
It's 86 rupees, sir. So sir, this cost is...
Time it went up from 86 to 96.
Okay.
And come back to 86.
Okay. So sir, for this quarter, sir, we took any price hike, or how has it been the pass on? How is this raw material fluctuation is getting transmitted into the selling price? What is the lag time? If you could explain.
In this business, the raw material gets passed on all the time. If it goes up, it gets passed on. If it comes down, it gets passed on.
Okay.
Passing on the raw material volatility is not the problem, but when the raw material prices drop very dramatically, the demand optics slows down because customers are expecting drop in finished goods prices, so they slow down the purchases. And this is not only with respect to polyester film, it is with respect to all products in the PET industry, whether it is yarn or bottle grade or film or anything. This has a dramatic effect on the offtake. So we are now hopeful that the raw material will stabilize going forth from now onwards, and we should see steady state returning in the next 10-15 days.
Okay. And this is all regarding the crude oil price volatility only. It is all the mirror replication.
It is both. It is related to crude also, and also related to the volatility per se within the raw material.
Right, sir. Sir, if we have a look at the balance sheet part, we find that both the borrowings as well as the current liability part, I think so, the borrowing for both under the long term and short term has gone up. No, I think so the current liabilities have gone down by 20 crore, but the long term has gone up by 38 crore. So how would you explain this change, and what is the sustainable?
In the quarter ended June 18, we had taken a term loan of about 53 crores from the banks, which helped us reducing the working capital borrowing. So the overall interest-bearing debt in the bank came, whereas the term debt has increased, the working capital borrowings have reduced.
Sir, just on a turnover base of around 800 crore, 820 crore net. Oh, sorry, not net of excise. Net of excise. What was our turnover for last year? I think 830 only.
Net of excise this year will be close to 1,000 crores in terms of turnover.
We will be able to cross 1,000 crores.
Okay, sir. But sir, for a 1,000 crore base, we require something around 300 crore of bank finance.
That is including long-term debt, no?
Yeah.
So then there are other current liabilities for which we are not paying any interest, which is the trade payables, the interest-free credit that we get from our suppliers. So we look at interest-bearing debt, which is the working capital borrowings, the term borrowings, and the purchases under LCs, which are with interest for our account.
No, my point was that for doing, we do a business of 1,000 crore. For that, we need 300 crore of loan. So the conversion ratio is only when it's 3 times that.
No. Again, what is the term loan in that?
The term loan as of now, on 31st March, it was 65 crores. And if we were to look at the current position of term debt, it would be...
Give it on 31st March.
65 only, sir.
Let's say on 31st March 2019, it would be about 74 crores.
So if you take total working capital debt that we have on books about less than 220 crores.
Okay. So this 290 has been steady. With the increase in the working capital utilization has gone up, but we have been able to reduce the term debts. And when we borrowed the term debt, that we have used to reduce the working capital utilization. So overall, interest-bearing debt remains at 290 crores.
And what is our average cost of borrowing?
Average cost as of now is about 11.5%. Between 11 and 11.5%. Okay. Because the buyer credit has been discontinued by the Reserve Bank of India, so that used to help us in reducing our interest cost. But no longer the buyer credit is allowed by the Reserve Bank of India.
Yes. So which rating agency covers we get our report from?
Brickworks.
And
we are currently rated as BBB. It's stable with neutral with stable outlook.
Okay. And when is the review due, sir? Generally?
We are with them the September quarter reviewed results. So soon, next week, we would share the results with them. And we expect them to look at our consistent performance and then, improve the rating. If not in this quarter, at least next quarter, we are expecting it to happen.
Right, sir. Sir, but the wait period for the specialty polymer part is just getting elongated. So, just wanted to understand, sir, what are the key milestones that we are still that are still awaited, that is preventing our company to commercialize what we have. We have been speaking about the segment, the patent part, for a very long time now. So, what are the key milestones that are pending that will translate into the actual numbers?
Well, you're absolutely right. The wait has been very long. If you can feel it, you can feel that the wait for us has been even longer. But it's not that the wait is going to be endless. We are hopeful of seeing some very positive results coming very soon. I'm unable to speak to you on specific areas because of confidentiality agreements that we have in place with our customers. But we have 3 projects which are ongoing right now. To start materializing very soon. So, please don't ask me on any details, but as I'm unable to do so because of confidentiality. But we are expecting these 3 projects to start one by one in a short period of time.
So, sir, the second half we can expect something. We can hear something about it, or that will be in the first quarter of next financial year.
I think we may hear something. God willing, we'll hear something in this financial year.
In this financial year itself. So, for the engineering plastic part, sir, what is our business model here, sir, and why are the margins so low, on the lower side?
The margins are not low per se, but they're all right. considering the business, it is never a business that's going to give us very superlative performance ever. It is a steady state business, and purely the margins are under pressure, have been at this level because of competition, and also because of volatility of raw material. Again, this segment has also been hit very badly by volatility of raw material. CBT pricing shot up to the roof until August, September, and has again taken a very sharp downturn, and the prices have dropped dramatically. So the same lag effect takes place here, and we are hit with stock losses because we have stocks. These are imported materials. So this is the main reason. Volumes are growing, especially in terms of our OFC business. The volumes are growing, but raw material volatility has caused problems because of.
Otherwise, we were consistently earning EBIT margins of about in the range of 6.5% to 8%. But this quarter there has been a drop because of the volatility in raw material prices.
Sir, which segments are we catering to in this engineering plastic?
Sorry, say again.
Which segments are we catering, sir? This engineering plastic is servicing which industries? Who are our major clients?
We are doing the electrical, electronic, telecom, light goods appliances, white good appliances, optical fiber cable. So we are an industrial applications.
And what is the potential for if we take the utilization levels for the company, and as the demand increase, as the verticals which you have mentioned are already showing good demand trends. So what is our capability? Last year we posted around 176 crore in this segment.
Yes.
So what is the?
Here we should be crossing. In the first half, we have already done 100 crores.
Right.
We are targeting to cross 200 crores this year in the top line.
In fact, one of the good things that has happened is that our exports, which we've been working on for the past 3 years, have started showing results. And this year we expect our exports to touch almost 1,000 tons.
Close to
1,100 tons.
In value terms, about 15 crores.
15 crores. That is on a base, sir? Last year base of?
Last year was nothing. Any number. Hardly is negligible.
And which segment? It is particularly any particular industry which we are having, or again a basket?
It's a basket.
And sir, now, if we reach the right economy of scales, are the margins improvement is expected from as the turnover goes with the fixed and the variable cost equation coming into play?
Yes, there will be a effect of economies of scale, and that will reflect in the improvement in margins. And the margins which are in the range of 6 to 7% will grow to about 9 to 10% as we reach higher volumes.
So for a peak level, sir, I'm trying to contemplate. For a peak level, we can achieve a 200 ballpark figure.
200 is this year's target.
Okay, then what is the peak level capacity for us for this engineering plastic segment?
We can reach with the current capacity. We can do about anything between 250 to 300 crores.
Okay, sir. And then this is only the volatility part that is stopping us to do, because I don't think the demand is anyway bothering us.
Demand is not an issue. Volatility plays a role, has played a role in the last 3 or 4 months.
Okay.
If volatility was not there, the numbers would have been definitely better.
Okay.
And since there is growth in the application that we are servicing, we will see that growth translate into our own business. So if we can expect to grow with the same growth rate or more than the application that we serve.
Right, sir. And so lastly, sir, for our main business for polyester chips and films, sir, as in your opening remark, you have shown that you have already spoken about it, that demand is good. Only one capacity from the leader Jindal Poly will be on stream. So, sir, other than that, sir, what are the pain points for this sector, and how can we improve our numbers in this segment?
You see, we are doing 2 things to improve our numbers. Number one, let me reassure you that demand growth is very solid in this business. And this can be easily corroborated by if you see the numbers of FMCG growth. We are directly, our biggest customers are the FMCG customers.
For the film segment?
For the film segment. So the growth of our business can be directly correlated to the growth of FMCG business. So we are expecting our film business to grow by about 12 to 15% in terms, 12 to 14% in demand growth. So with the current of about 500,000 tons per year in India, you can expect the growth to be anywhere between 40 to 50,000 tons per year in the film business. That is number one. Number two, like I have said in my opening remarks, there is not major new capacity coming in, only one line coming in of Jindal at the end of Q4 FY19 or maybe early Q1 FY20. And this is not expected to make a big upheaval in terms of the demand supply, and so therefore we expect margins to continue. Thirdly, we are continuing to increase our proportion of value-added products, which is going to act as a great mitigation factor for any volatility in terms of base film prices. Fourthly, we have taken on a very strong cost-cutting program. This is showing very good results. Just to let you know that we have targeted a reduction of about 14 to 15 crores in terms of cost cutting, out of which about 5 crores has already been achieved, and the balance 9 to 10 crores is expected to be completed by April, May next year. Apart from that, we are also looking at monetizing our corporate office building, which will help to reduce debt by about 35 crores and have a annual saving in interest saving of about 5 to 6 crores. So overall, we are looking at of about 20 crores per annum, which is now in the process of being implemented.
Correct me, sir.
Excuse me, Mr. Kapoor, I'm so sorry to interrupt.
Oh, no, I got your point, ma'am. I have taken a lot of time. I'll come in the queue.
Thank you very much. We would take the next question from the line of Pratik Matkar from Dollars Capital. Please go ahead.
Yeah, thank you, sir. I have three questions basically. First is what is your outlook on EP business?
I think I've already discussed this in the previous question, that this year we are going to clock a turnover in excess of 200 crores compared to 170 crores in FY18. And we expect this business to continue growing by about 10% per annum over the next 2-3 years.
Okay. And how do you see your debt is coming down? Realistically, how much debt you believe that you will bring down in coming years?
Well, the first portion of debt reduction we expect to come down by about 35 odd crores coming through from the sale of the corporate office building, which we expect it to happen in the calendar year of 19. So that is one major chunk that will reduce. And after that, we'll see how the business, depending on the business performance as the business performance improves, we will see how we can reduce the debt even more.
Well, we will continue to repay the scheduled debt on time as per the repayment schedule that we have agreed to with the bank. So according to that, we would be repaying 44 crores this year and 20 crores next year.
See, this year our repayment was about 44 crores, out of which 27 crores has already been paid. Balance 14 crores will be paid by the end of March 2019.
As per schedule, exactly.
And from next financial year onwards, our repayment is only 20 crores a year approximately. So we don't have much repayable debt on the books, only about 70 odd crores.
Okay. And the last question is what is the progress on specialty polymer business? As you had mentioned earlier that there are some new products in the lineup.
Yeah. So in terms of specialty polymer business, we are already doing a small volume of our stain-resistant product to one company in America, but that volume is not very large. That will continue every year. But there are 3 other projects which are in the pipeline, which have a substantial potential. I'm not at liberty to discuss them in detail right now because of confidentiality agreements with the customers, but we expect to see movement in them very shortly.
Okay. Thank you, sir.
Thank you. Next question is from the line of Aman Sandalia from AK Securities. Please go ahead.
My question is, what is the spread in BOPET right now and what it was in the Q2?
Sorry, say again, please.
What was the spread in BOPET in Q2 and what is currently right now?
Spread. You mean margin? Gross value addition.
No, the sale price minus the raw material cost.
That's right. Gross value addition. I'll just give it to you one moment. Q1 and Q2 ka de do.
Q1 in, let's say, non-metallized plain film in the domestic market, we were getting about 40 rupees a kg over raw material. And Q2, we were getting about 45 rupees a kg over raw material in domestic market in plain film.
And what is currently right now, sir?
Currently it is about 40 rupees a kg.
It has come down a bit.
Yeah, that is the reason is because of the volatility of raw material. See, when the raw material prices come down sharply, we have the prices have to be passed on even before the raw material takes effect. That is the reason. And also during Diwali, Diwali season ends about 15-20 days before Diwali starts, before Diwali date. So this is actually the dullest season for us, dullest period for us.
Okay. And sir, how is the international scenario for the BOPET?
International scenario for the BOPET is fine. The prices and the margins are quite good.
And demand growth rate is about 6%.
Overall global demand growth is about 6%, which is fantastic. Domestic demand is growing at about 12 to 14%. ये जो current अभी आप margins थोड़ा dip देख रहे हैं, that's only because of Diwali and the volatility of raw materials.
So hopefully it will be again go back to the normal level, better than 45.
10-15 days after Diwali, the demand growth comes back to normal. The demand comes back to normal.
And sir, as you have said that there is no major capacity coming in India. So how is the international scenario as far as supply is concerned? Any major capacities coming in the international market? So I think,
See, China was the one who had created the maximum capacity since between 2004 and 2014-15. They went up from a level of almost 75,000 tons per annum to almost 1.5 million tons of capacity was put up in China in 10 to 11 years. No new capacity up in China. No new capacity. And capacity utilization is steadily growing on a global basis. So that is the reason why we are seeing a steady margins, and they will continue to improve.
So, sir, at the current margin, whether it is viable to set up a new plant, whether it attracts the new investment at the current margin?
Well, you see, at the current margins, demand is continuing to grow. Let us be very clear. Demand is continuing to grow by 12-13% per annum. So, the demand meet करने के लिए तो आपको capacity आनी पड़ेगी ना. You can't keep the market starving.
That's true. So, in the short term or in the medium term, the margin will remain quite good.
Yeah, we expect the margins to remain quite steady and stable and maybe improve over the next into medium term, short to medium term.
Okay, sir. Thank you.
Thank you. Next question is from the line of Siddharth Rajpurohit from JHP Securities. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, can I have this spread, this raw material, this gross margin for Q2 FY18, please?
We give it right now. September
that was Q1 and... no, sir, that was for Q1 and Q2 this year. I want last year, Q2.
Oh, last year Q2.
Possible? Yes, sir.
Last year Q2 was the worst period. If I remember correctly, the similar numbers were about 20 to 25 rupees a kg.
I'll share the number with you.
Okay.
September 17, the plain film we were getting about 26 rupees as compared to 45 rupees in September 18 quarter. So there is an improvement of about 19 to 20 rupees a kg.
So margins have actually doubled since last year.
Yes, sir. So, and this scenario will continue, say, because no capacities are coming up and a new capacity will at least take 18 months or 24 months to come up. So the scenario is expected to continue for at least a year's time?
Yes, you're absolutely right.
Yes,
only one new capacity of Jindal is starting up by March, April next year.
One line. Right, sir. You mentioned that. Okay, sir. Sir, just wanted to have one clarity, sir. My assumption is that this permeability between BOPET and BOPP means in terms of usage. Can BOPP act as a substitute because BOPP segment is currently not in a good shape? My understanding is that they are almost operating at cost.
No, the overlap is very, very marginal. You see, please understand, PET gives you very good gas barrier properties, while BOPP gives very good moisture barrier. So the applications are segmented.
Okay. So there is no overlap per se.
Very marginal overlap. Very, very marginal overlap.
Okay. Fine, sir. Thank you. And all the best.
Thank you. We will take the next question from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, sir. Thank you again for the opportunity. Sir, under this segmented reporting, we found this other unallocable expenditure net off, that is around 10.5 crore for this quarter and 11.5 crore for the previous quarter. How do you explain this, sir?
So there is a marginal increase in the administrative expenses on account of legal and professional. So that has resulted in the increase of about 1 crore rupees.
No, if I'm talking about 10 crore rupees, if we take the segment revenue, segmental results.
So you're not talking of increase, you're talking absolute. So the corporate expenses which are not directly related to the business. So for example, the salaries of the corporate office people, financial accounts, the administrative nature expenses which are incurred for the company in totality. So these are the expenses.
These are non-allocable expenses.
Not directly related to the business. Business means the segment that we have reported.
Okay. That is there. But actually it is only the segmental reporting that we have to do just for the accounting purpose.
Yeah. And you will see a certain consistency. There is no major variation from one quarter to another quarter while reporting these expenses.
So there is also mention about other expenses. You were telling something that has gone up for this quarter. I think some notes also you have mentioned.
Other expenses have gone up marginally because of the legal and professional expenses. Increase in the legal and professional expenses.
How much of that has increased, sir?
About 1 crore.
About 1 crore. But what we are seeing is around 8 crore jump quarter on quarter. But that is proportionate to the turnover increase also, I think.
No, 8 crore. Just hold on for a minute. I think you are not reading it correctly.
From 38.6 crore, it has gone up to 46 crore for this quarter on quarter.
That is for the year, sir. 48 crore is not the quarter number.
46, sir. 46, sir.
That is for the year, sir. The other unallocable expenses for the quarter ended.
No, sir. I'm talking. Excuse me, sir. I'm talking about the other expenses part now, sir. For the 2G, that has gone up from 38.6 to 46.1.
Other expenses. So
yeah. I'm talking.
Achha, you are talking of the results itself. Just
right. Yes.
So you have raw materials separately reported, employee costs and finance costs separately. Other expenses include selling and distribution expenses, power and fuel expenses. So there has been an increase in the power and fuel expenses because the fuels that we use, husk, furnace oil, HSG, etc. There has been an increase in those expenses during the quarter.
Correct. Sir, you were talking about the capacity. Then I was just put into the queue. That is the total capacity for our countries like 5,50,000. Am I correct, sir?
The total capacity, installed capacity of film in India is about 600,000 tons.
600,000 tons. And if you could divide it player-wise, sir, how much it is? Jindal, how much? And in the order of top three?
About 110,000 tons.
I'm not getting it again, sir.
Jindal is highest at about 110,000 tons.
Okay.
Then Polyplex, Ester, Uflex, Spurge, etc. are in the range of 55 to 60,000 tons.
Okay. The biggest player is only having 20% market share, less than 20%.
Yes, capacity, 20% of the capacity.
Capacity. And the
We are at 8 to 10% capacity.
Not getting you, sir. Hello?
The biggest Jindal is at about 21% of the total capacity. The other players are at about 9 to 10% of the capacity.
Right, sir.
Players are there with 5% each.
Okay. And now the biggest player is expanding its capacity by what percentage, sir?
He is putting in a new line of about 4,000 tons per month. 3,500 tons per month.
So that translates into 36,000 in totality. 36 to 40,000.
He will increase his capacity from 110 to, let's say, 145.
140. So that is also 35 to 40% jump. So, sir,
more capacity.
Yes, sir. So, sir, depending on that, sir, depending upon the demand and supply equation, would it be denting on our margins going forward when they will be running on full budget, or how much is the import? Whether the films are
there is virtually no import.
No import.
No import.
So, sir, how will this capacity going to play? It will be totally for the export part only. I just wanted to understand the consumption pattern here also, sir.
I told you that the current demand in India is about 500,000 tons, 450,000 tons per year, which is growing at about 12% per annum.
Correct, sir.
If I take 12% of 450,000 tons, is about 50,000 tons per year. So the demand is over last year has grown by more than 50,000 tons. He's coming up with a 40,000 ton capacity. Let's put it this so that to take care of this additional capacity that is coming in. Or to put it another way, अगर ये line नहीं आती तो shortage there would be a shortage.
Shortage हो जाएगा. So that we are also contemplating something to come up to how much what is the cost of putting up a 1,000 or a 10,000 ton capacity today. The greenfield
capacity आएगी तो 40,000 45,000 टन पर ईयर की
तो क्या कॉस्ट आउटले होता है सर इसका और रिटर्न कैसा बनता है अभी के हिसाब से?
It's a 300 crore approximately a 300 crore investment.
ओके और सर टॉप लाइन मिनिमम क्या रहती है सर? हमारी 50,000 की कैपेसिटी है ना?
हाँ तो टॉप लाइन अगर 100 रुपीज का मैं बेस फिल्म प्राइस मान के चलूँ विदाउट कंसिडरिंग एनी वैल्यू एडेड प्रोडक्ट, then you'll get a top line of about 400 crores or 450 crores per year.
Right, sir. And sir, the base margins will fluctuate in what pattern?
So those are fluctuating. So one can it's very difficult to assign a number on the payback period. It depends on how you view it.
How we do it. Sir, lastly, sir, on one part, sir, do tin plate also comes in our play, or that is a different player in packaging industry altogether?
Sorry, what?
I'm talking about tin plate industry. Do tin plate do falls in our competition because they are also in the packaging in the same film part only? Electrotype.
No. They have nothing to do. We are nothing to do. Packaging. I don't even know this company. Yeah.
Right. Thank you, sir, for all elaborate explanations, sir.
Thank you.
Thank you.
Thank you. We would take the next question from the line of Siddharth Rajpurohit from GHP Securities. Please go ahead.
Sorry, sir, if this has been asked, I got dropped from the call. So Q&Q, we have mentioned that our gross margin has gone up from 40 to 45. But if I calculate the EBIT margin, it shows a slight dip Q&Q. So if you can please elaborate.
So with the 40 to 45, we are talking of polyester film business only.
Right, sir.
So there are other two segments also.
So polyester chips and film segment I am talking, sir.
And then with the gross margin is the selling price minus raw material cost. As we told in the previous question, there has been an increase in the power and fuel expenses.
Okay. So that is eaten in.
That explains the drop in the overall EBIT performance of the company.
Okay. So is it possible to give the EBIT per unit, sir? Or EBITDA per unit?
Per unit or what?
Actually, how do we allocate the common expenses? That becomes, it becomes subjective then.
Okay.
We do report all the numbers on the basis of segmental reporting as required according to the accounting standards.
No, that is right, sir. Just for an analyst to go dive more deeper. But it's fine, sir. Yeah, okay. Thank you.
Yeah.
Thank you. Well, ladies and gentlemen, that seems to be the last question for today. I would now like to hand the conference over to the management for their closing comments.
Ladies and gentlemen, thank you very much for attending the Q2 and H1 FY19 earnings call of Ester. Thank you very much.
Thank you very much, ladies and gentlemen.